For an instant audit on this, we want to say hello to Mike Reed. He's editor of global news coverage for Dow Jones Newswires, and Jeff Duncan of Duncan Financial Management. Jeff, you're in St. Louis, correct?
That is correct.
So let's start with you. The export story. One thing you hear is that the United States, although we believe in free trade, we are on the bad end of that. And that countries, for instance, Japan, we still don't have access to their markets as we should. Is that accurate? And what can the president do? It sounds like he's saying full speed ahead and, man the torpedoes.
Well, the president, this has been a battle for years, if not decades, with imports and exports. The president's kind of limited on exactly what he can do because at this point, running a big deficit, these countries are buying our debt. We need to continue for them to buy our debt and then to force them to start importing more of our goods and declining the exports to this country. It's a tough situation. So the president can do a lot of talking about what he'd like to see happen. But really, if you look at the situation, it's very difficult to implement a plan such as that when we're in this deficit issue that we're in. So I think it's just going to be a lot of talk and trying to get the federal government to do this, that, and the other thing. It's just probably a waste of time at this point.
Well, Mike Reed, what do you think? Is it a lot of talk?
Yeah, I do agree. I think that the problem also is that the greatest trade partner is also the greatest debt partner, and that's China. And clearly there's this continuing issue with the revaluation of the currency, which is artificially low, and hopefully some of this overheating in the economy might prompt a rethink, and there has been some suggestion from Chinese officials that they may at least consider maybe possibly thinking about raising, it's very murky as to whether they are. But the revaluation of the Chinese currency is critical to some sort of level playing field because the trade imbalance between China and the US is massive.
Right, if the yuan was allowed to rise, then Chinese products would be more expensive, not only here, but in some countries where we compete with the Chinese for exports.
Exactly, and the problem also is, of course, the manufacturing base in the US has been eroded, as it has in most Western industrialized countries as they move towards a services economy.
But let me ask you, and I'll start with Jeff on this question. Where do we stand in the United States? There's this perception that we don't make anything, which is just not true. In fact, are we not the largest producer of finished goods in the world? When we talk about manufacturing, Jeff, where do we stand on a competitive basis?
Well, in manufacturing, obviously we have a disadvantage because of our labor costs. But I think the advantage that we have is being a very big producer of grains. And with China and India, as their economies grow, people start making more money, they're going to incorporate more of a heavier diet that we're used to. That's going to be more an opportunity for us, in my opinion, is the farming community, agriculture specifically, of importing or exporting a lot of grains.
The Japanese who said the United States would be the breadbasket for the world, and this was maybe almost 2 decades ago, but the United States will be the breadbasket and we'll be the manufacturer. Well, it didn't quite work out the way the Japanese might have thought with the rise of China. So it sounds like, and we can remember the prices of wheat and other food staples just a few years ago. But my question, Mike, where do we stand on manufacturing? We are not number 3, 4, 5. We're number 1, aren't we, in finished goods?
Well, if you look at a proportion of GDP, then the US is still very much a services/consumer economy. But it still has a very strong manufacturing base. Some of the great companies, the world's great manufacturers, are American companies. Think of Boeing, for example. If you look in Europe, they have a bit of a legacy of manufacturing, particularly in Germany with the great automakers, Daimler. I was going to say Daimler Chrysler, but it's Daimler-Benz. In the UK is the one country which really lost its manufacturing might during the 70s and 80s and became totally a services economy. And if you look at that now, their plight is exactly what happens if you lose too much of your manufacturing base. It's very hard to sell your way out with a services economy in a downturn. So the US isn't there yet, and it still has some very innovative, clever manufacturing and the big guys, as I said, like Boeing. But there's no doubt that there is still a massive imbalance and that the labor costs are an issue, and it has to try and, to start, get China to revalue its currency so that we can get a level playing field.
All right, so Jeff and Mike, we're going to talk more throughout the hour. We'll try and work this subject back in because I think a lot of people are concerned about the U.S. economy, especially when it comes to manufacturing. But right now,
well, for an instant audit on all of this, let's go to Mike Reed. He is the global news editor for coverage for Dow Jones Newswires, and Jeff Duncan of Duncan Financial Management. All right, let's take a look at this. Mike, let me begin with you. There has been, I know we've been talking about this morning, a lot of talk about this bubble, if you like, this credit bubble that's been existing in China. Is that a little bit of a myth, or is there some real risk?
No, it does look like there's some real risk, and you saw the central bank essentially in January tweak the reserve capital ratio that they expect banks, that's the amount of capital banks have to hold. I think it was either 15 or 15.5%. They moved it up a half percentage point. Didn't really have an effect in January. They did it again in February, moved it up another half percentage point, and yet the bank lending, the capital still flowed into businesses. The problem also in China is, where is this money going? There does seem to be an asset bubble in housing in the 70 main urban areas, but there is also a problem with provincial infrastructure in terms of money going to projects to essentially build roads and bridges to nowhere. So the stimulus definitely worked in terms of pumping a huge amount of money into the system, but what we've seen so far is the central bank trying to use tweaks and talks about lending curbs to slow down the economy instead of raising interest rates and, more importantly, revaluing the yuan, which would have a much more significant effect.
Interesting. Jeff, do you agree?
Yeah, I would agree that tweaking is not the answer here. At this point, they really need to pull back the throttle. They need to push back and make some drastic changes on the stimulus to bring inflation under control. That is a big number even for China. And to make these changes, it's going to take some significant pressure and some pain from the economy and from the people in China to understand what they're trying to do. But at some point, they really, really need to make these big changes, and the tweaking needs to be stopped at this point.
And Jeff, let's face it, we kind of have to take the numbers that come out of China with a little bit of grain of salt, because how can we really believe how accurate they are?
Well, that is correct. I mean, China has been notorious for having numbers that are borderline if they're accurate. But this is a significant number. We know the amount of money that they've been pushing into the economy. We know about their housing bubble that's been continuing in a lot of the provinces. So at some point, they really just need to push this back, or they're going to have some very rampant inflation, which long-term is not good for their economy and for the global economy.
Well, Mike, Jeff mentioned a housing bubble, but it's a little different from what we saw in the subprime mortgage collapse in the U.S., because typically the Chinese home buyer isn't as massively leveraged as the U.S. buyer. Isn't that correct?
Yeah, it is, and it's a different type of housing bubble in that there is a discrepancy between rural and urban, and it depends on the provincial centres. But one of the fundamental problems in China, one of the structural problems they're going to have to grapple with, is that this very low currency for some time has enabled them to export massive amounts, particularly to the US, at low cost. But the problem is that it has also created businesses which, with a truly valued currency, would not be sustainable. So that if there comes a time when that revaluation occurs, and it looks increasingly likely that that will have to happen, suddenly a significant number of particularly small businesses are not sustainable. And so that's the great fear for them. They have to make that very slow adjustment, and they have to balance those two things. But it seems to me that the status quo is not acceptable. You cannot continue. You can raise interest rates to slow down this economy. You can do some other things. But long term, you need to address that structural imbalance.
Yeah, way too dependent on exports. All right, we're out of time. Mike and Jeff, thank you very much for talking about the Chinese economy and the inflation that we're seeing there now. And we want to know